Hi everyone, in this video we'll be going over accounts 2023 specimen paper 2. So there is a slight change in paper 2 from examination for 2023 onwards. Previously we used to have 4 questions, 2 of 30 marks and 2 of 15 marks. So in total there was question of 90 marks and we were also given a time limit of 1 hour and 30 minutes, right? But from this year onwards we will be having the same question weightage. So there will be 2 questions of 30 marks and 2 questions of 15 marks, but we will be receiving a time limit of 1 hour and 45 minutes, which means that we'll be getting additional 15 minutes. So that is of great advantage. And in this video, we'll be going over question 1, which is of 30 marks. And according to our total marks weightage and our time limit, for 30 marks, we should be ideally spending 35 minutes. So we will be attempting to complete this question under 30 minutes. Now, without any further delay, let's get started. Hamid and Jamila have been in a partnership for several years and do not have a partnership agreement. They do not maintain full accounting records. Now, for the first question, we need to state 2 disadvantages to Hamid and Jamila of trading as a partnership rather than as sole traders. So the very first disadvantage would be that since they are in a partnership, they will have to share profits with their partners, right? But if they were to operate as sole traders, they would have the entire profit for themselves. Let's write it down. Having to share profits. And the second disadvantage would be there might be some possible disagreements between Hamid and Jamila regarding some of the issues, right? But if they were to operate as sole traders, they would have sole decision making. They would not have to consult with any other people, which means that there would not be any disagreements. But since they're in a partnership, there might be possible disagreements. That would be our second disadvantage. Let's write it down. Possible disagreements between partners. Now let's move towards the second one. Here we need to state 3 items other than profit and loss sharing ratio, which may be included in a partnership agreement. So partnership agreement basically consists of all of the code of conduct or rules for this particular partnership, right? So the very first factor would be the profit and loss sharing ratio, and now we need to write 3 more. So what we can write down is whether there is any interest charged on the capital and at what rate that interest will be applied, right? Let's write it down. Whether any interest on capital should be paid and its rate. The second one could be interest on drawings, right? And the third one could be partner salaries. So these are some things that should be clearly mentioned in the partnership agreement. Now we can move towards another question. Here we're given additional information. We're given the information at 31st December 2020, which is the closing date, and at 1st January 2020, which is the opening date. Let's have a look at our question. We need to calculate the revenue for the year ended 31st December 2020. We are given our trade receivables right here, and during the year ended 31st December 2020, the following occurred. We have irrecoverable debt written off, receipts from trade receivables, and returns inwards. Now we need to create a statement so that we can figure out the total revenue for the year ended 31st December 2020. Alright, so I will be starting with our receipts because whatever amounts that we receive from trade receivables is for the goods that we sold, right? So obviously this value should be included in part of our revenue. Let's write it down. That's going to be receipts with the value 164,650. Now the second item that we need to include in our revenue would be irrecoverable debts as well, because irrecoverable debts is a part of trade receivables for which we will not be receiving any sort of monetary value, right? But it does not mean that we did not sell the goods worth 336. It means that we sold it, but the person that purchased it was not able to pay us this particular amount. That's why the irrecoverable debt occurred. So we should also be including this amount in our revenue. Let's write it down. That's irrecoverable debt. Written off with the value 336. Then the next item that we need to include is going to be returns inwards. So returns inwards is basically sales returns, right? And sold goods can be returned only if it is sold in the first place, right? Which means that its value should also be included in the total revenue. And that is the reason why we will be including our returns inwards as well. So that's going to be returns inwards. And its value is 1084. Okay, now the next thing that we need to include is our trade receivables value for the opening date as well as the closing date. But the adjustment for these two values is going to be quite different. Let's talk about our closing date's value first. Its value is 12,930. And this value just represents that we already sold goods worth 12,930 in the year ended 31st December 2020, but we have not received this payment yet, which means that we sold these goods in this particular year for which we have not received any sort of money. So this should be included in the total revenue value for the year ended 31st December 2020, right? So we will be adding this amount of 12,930. Let's do it. That's closing trade receivables with the value 12,930. Now let's talk about our opening trade receivables. So this also has the same explanation. This is the trade receivables value at the end of the year ended 31st December 2019 rather than 2020, right? Which means that goods worth of 14,380 was sold in the year ended 31st December 2019, but the amount had not yet been received by our partnership, which means that these are the goods sold in the year ended 31st December 2019, which means that this amount should be included in the revenue value for the year ended 2019 and not for the year 2020. And since we are calculating the revenue for the year ended 31st December 2020, we do not need to include this amount, which means that we'll basically have to subtract it since we added all of our receipts, right? And receipts includes all of the trade receivables for last year as well. So we're just going to deduct this amount. Let's do that. That will be minus our opening trade receivables. And the value was 14,380. And this concludes our statement in order to figure out the revenue. So now our total revenue is just going to be the sum of these five amounts. That's 164,650 plus 336 plus 1,084 plus 12,930 minus 14,380, which results in the value of 164,620. That's the value for the revenue. Now, if you find it easier to just memorize and write rather than figuring out which amount should be added in order to figure out our revenue, you can just memorize this statement. Because all of the questions where we are asked to figure out revenue, we will be using this particular concept. Now we can move towards the next question. We are again given additional information. All right, this is the information for the year ended 31st December 2020 again. Then we're also told that all goods are sold with a markup of 50%. So a markup of 50% just means that our total revenue is just going to be equal to cost of sales plus 50% of cost of sales. And this 50% of cost of sales is just going to be our gross profit, right? So let's write it down. So that's cost of sales plus 0.50 times cost of sales, which means that revenue is just going to be 1.5 times cost of sales. Then during the year, Hamid took goods for his own use. So goods for his own use should always be subtracted from purchases when we are preparing our income statement, right? Remember it. but no record was made of their value. So we know that Hamid took the goods for his own use, which means that there was drawings, but we do not know that particular amount. So we need to figure out this amount as well. Then furniture and fittings with a carrying value of 800 were disposed of during the year. Now we need to prepare the partnership statement of profit or loss. So statement of profit or loss is what we used to refer previously as income statement for the year ended 31st December 2020. Let's prepare it. So we're given our working section right here. We will be performing all of our workings in this particular box. And remember, in exam as well, you should be showing all of your workings in this particular box so that you get markings for each of it. So remember the format of statement of profit and loss. We always start with our revenue. Let's write it down. And we just figured out the total value for revenue in the previous question. So we're just going to copy that particular amount. We figured it out to be 164,620. Let's write it down. And we are also told that there was return inwards, right? And we need to figure out the net sales by subtracting the return inwards from our total sales. And return inwards was of 1,084. So let's subtract it from the total revenue. So that's less return inwards. And its value is 1,084. Okay, now we can get our net revenue. That is just the difference between these two amounts. That's 164,620 minus 1,084, which results in 163,536. Now our next step would be to subtract our cost of sales. So let's write down all of the components of our cost of sales first. So we start with our opening inventory. Then we add all of our purchases. Then we also know that there was goods taken for own use, which should be subtracted from purchases, right? So I'm just going to subtract the goods for own use. And lastly, we also need to subtract all of the closing inventories. Now let's have a look above and figure out the values for each of these items. We start with our opening inventory. Okay, inventory is given right here. We can see that at 31st December 2020, which is the closing date, our inventory value is 9,332. So this is the closing inventory's value. And at 1st January 2020, which is the opening date, we have the inventory value of 7,430. So this is the value for our opening inventory. Let's substitute these two values in our statement of profit or loss. We have the opening inventory of 7,430 and the closing inventory was of 9,322. And we need to subtract it, so I'm just going to put it in a bracket. Now the next one is purchases. Let's have a look above. Okay, we have purchases of goods for resale and its value is 112,152. This is the amount that we need to substitute in our statement of profit or loss. So let's do that. That is 112,152. Now we were already told that goods for own use, its value we do not know, so we need to figure it out, right? And this concludes all of our cost of sales. So we're going to write down the total here and then figure out our gross profit. Okay, now we will utilize our information regarding the markup, right? This relation, we'll use it now. What we know is that revenue is 1.5 times our cost of sales. We do not know the total value of cost of sales, but we have already figured out the total value for revenue, which means that by substituting its value, we can easily figure out the value for cost of sales. So let's do that. We have our total revenue to be 163,536. And remember that we use the value for net revenue and not the total revenue. All right, let's substitute it. That is 163,536 equals to 1.5 times cost of sales. So the cost of sales is just going to be 163,536 divided by 1.5, which results in the value of 109,024. So this is the value for total cost of sales. Let's write it down in our statement of profit or loss. 109,024. And I'm just going to write it down in a bracket because we need to subtract this total from our net revenue in order to figure out the gross profit. Now let's figure out the gross profit. That is just 163,536 minus 109,024, which results in the value of 54,512. Now we still need to figure out the value for goods for own use, right? Now I'm just going to create an equation because we know that this total is formed by adding these four items, right? I'm just going to write it down in an equation form. That's opening inventory plus purchases minus goods taken for own use minus closing inventory results in total cost of sales. All right, now let's substitute the known values. We have our opening inventory to be 7,430. We have our purchases, which was given above, to be 112,152. We need to figure out the goods taken for own use, and we also have our closing inventory value to be 9,322. And this equals to cost of sales, which we just figured out to be 109,024. Now we can easily figure out the goods taken for own use. That's 7,430 plus 112,152 minus 9,322 minus 109,024, which results in the value of 1,236. And this is the amount that we need to write down in our statement of profit or loss. So let's do that. That is 1,236. And since we need to subtract it, I'm just going to put it down in a bracket as well. All right, now we've concluded till our gross profit. The next step would be to subtract all of our overheads. So that's less overheads. Let's have a look above and figure out the items to be included in our overheads. The very first one would be administrative expenses. Let's write it down. And the next thing to look for would be whether we require any sort of adjustments made to this particular amount paid, right? If there is some sort of accrual or prepayments, we should be adjusting it. So let's have a look above. Okay, we can see that there was administrative expenses owing, which is the accrual one, and prepaid. We need to adjust it. So I'm just going to start with the amount that we actually paid, which is 8,228. I'm going to write it down in our working section. Now let's have a look above. So we have owing at the date of 1st January 2020. We owe 472. So remember that this date is for the year ended 31st December 2019, and owing means that these expenses have already been incurred but we are yet to pay it. So these are the expenses relating to last year, which should not be included in the statement of profit or loss in this particular year. So I'm just going to subtract this amount of 472 from the amount that we actually paid. That's minus 472. Now let's have a look at the prepayment. We have administrative expenses prepaid at the date of 31st December 2020, and it amounts to 291. So prepayment just means that these are the expenses for future periods. If we're talking about at 31st December 2020, this amount of 291 is for the year ended 31st December 2021, for the next period, right? So we should not be including the expenses of next year in our statement of profit or loss in this particular year. So I'm just going to exclude this amount of 291 as well. Let's do that. That's minus 291. So the actual amount of administrative expenses that we should be including in our statement of profit or loss will be 8,228 minus 472 minus 291, which results in the value of 7,465. Let's write it down. Now let's have a look at our another item to be included in overhead. We're given insurance paid. Again, we have to look for any of the adjustments. Okay, we have insurance prepayment. Again, it is at the date of 1st January 2020. So we know that the opening date just refers to the year ended 31st December 2019. And if this 390 was prepaid in this year, this just means that 390 is the actual insurance for the year ended 31st December 2020, which is the future period as compared to this date. Right? And we're talking about the statement of profit or loss for this particular year, which means that this expense should also be included. So we need to add 390 prepayment to the actual insurance paid for this particular year, which is 1090. Let's do that. That's 1090 plus prepayment of 390. This is the insurance and this is the administrative. Alright, so the total insurance that we need to include in our statement of profit or loss is just going to be 1090 plus 390, which results in 1480. Let's write it down. That is insurance and 1480. Now the next overhead we have is the purchase of additional furniture and fittings. So this is the non-current asset, right? And we do not include the purchases amount of the entire non-current asset as an overhead or expense in our statement of profit or loss. We just charge the depreciation, so we can ignore this for now. Then we have receipts from disposal of furniture and fittings. Again, we do not include the entire receipts. We only include whether there was a profit on disposal or loss from disposal, right? So our receipts was 575. This is the amount that we received, which means that our sales proceeds is 575. Then we were also told that furniture and fittings with a carrying value of 800. So carrying value is just equivalent to the net book value in this case. So that's net book value of 800. Now we need to figure out whether there was a profit or loss on disposal. So we can see that for a non-current asset worth 800, we only received 575, which means that it was a case of loss, right? So let's figure out our loss. We have our sales proceeds of 575 and the net book value of 800. So there was a loss on disposal, and loss on disposal is just going to be the difference between net book value and our sales proceeds. In this case, that's 800 minus 575, which results in the value of 225. So we need to include this value as a loss on disposal, which we treat as overhead in our statement of profit or loss. Let's write it down. That's loss on disposal of fittings with the value 225. All right. Then, okay, we completed this. We have rent of business premises. We again need to look for any adjustments to be made. We can see that there is no adjustments for rent, so we can just directly write the amount paid, which is 14,500 as an overhead in our statement of profit or loss. Let's write it down. That is going to be rent of business premises with the value of 14,500. Let's have a look at another overhead. We then have staff wages. Again, let's have a look if we need to adjust anything. Okay, there are no adjustments for staff wages. We can just substitute this amount in our statement of profit or loss. That's 10,230. Staff wages for 10,230. Okay, now the final thing would be depreciation. Like I said before, we do not charge the entire purchases amount as an overhead in our income statement, but we charge depreciation each year, right? So let's write down our depreciation on furniture and fittings. And we need to figure out its value. And we can do so by utilizing the above information right here. We're given furniture and fittings at carrying value, which is basically their net book value, right? And we receive the net book value for this year from previous year's value. If we add all of the purchases and subtract all of the disposed non-current assets carrying value from it. We start with the opening net book value. Then we add the purchased new additional a non-current asset, so purchases will be valued at its cost. Then we subtract all of the disposed net book value, and we also subtract the depreciation charge for this year. In that way, we get the closing net book value. So if you find it easier, you guys should also be memorizing this format because it is very useful in many of the questions. And I'm just going to write down and substitute the values for all of the opening net book value purchases, disposed net book value, and the closing net book value in order to figure out depreciation. We can do so in our working section. So we'll start with the opening net book value of 24,720. Let's write it down. Then we need to add the purchases, which is given above. So that's 4,500. Let's write it down. Then we need to subtract the disposed net book value, which is again given right here. That's 800. And then we subtract the depreciation charge for the year. And we get our closing net book value, which is 26,580. Let's write it down. Now we can easily solve for depreciation. That is just going to be 24,720 plus 4,500 minus 800 minus 26,580, which results in the value of 1,840. Let's substitute this amount in our statement of profit or loss. That's 1,840. Now let's have a look for any other overheads that we need to include. We completed this section. We then utilized this information as well. We're done with this. We're done with this as well. Okay. Then we have included, okay, there's irrecoverable debt, which should be treated as overhead. So let's write this amount of 336 in our statement of profit or loss. That's irrecoverable debt written off, amounting to 336. Again, let's see if we missed anything else. We have included this section as well. We have utilized this section as well. All right, so that concludes all of our overheads. Now the next step would be to figure out the total for overheads by adding these amounts. That's 7,465 plus 1,480 plus 225 plus 14,500 plus 10,230 plus 1,840 plus 336, which results in the value of 36,076. And I'm just going to write it in a bracket since we need to subtract it from our gross profit in order to figure out the profit for the year. Okay, let's figure out our profit for the year. Like I said before, this is just going to be the difference between gross profit and our overheads, which in this case is 54,512 minus 36,076, which results in the value of 18,436. So that is our profit for the year for this partnership. Now we can move towards the next question. We are again given additional information. Hamid and Jamila have been advised that their business could be improved if they were to keep full accounting records. They are considering two options. So the first one would be to employ a part-time bookkeeper at a salary of 5,000 per year. Then the second one would be to purchase a new computerized accounting package to maintain all financial records. This will cost 12,000 and will be written off over 5 years. So our written off is just going to be depreciation, right? So the depreciation for the computerized accounting package per year is going to be 12,000 divided by 5, which results in 2,400. Okay, then Hamid has said he will loan 12,000 to the business but will require interest of 5%. Let's figure out the interest as well. That's 12,000, the amount of the loan, times our rate, which is 0.05. This results in the amount of 600 per year. All right, now we need to calculate Jamila's share of profit or loss for both option 1 and option 2. Okay, first of all, let's recall their profit and loss sharing ratio. Let's have a look at the above question. Okay, we were told that they do not have a partnership agreement. So not having a partnership agreement means that they will share profits and losses equally. All right. Now we just need to divide the profit among two parties, right? So that's just going to be total profit divided by 2 in order to figure out Jamila's share of profit for both option 1 and option 2. So we can start with our previous profit that we figured out from our statement of profit or loss. It was 18,436. Let's write it down. That's 18,436. And for the first option, we should be paying out 5,000, which means that our profit will be reduced by this amount. So let's reduce it. That's minus 5,000. And in order to figure out Jamila's share of profit, like I said before, we just need to divide the total profit by 2. So that's divided by 2, which results in her share of profit according to option 1 to be 6,718. Now we just repeat the same process for option 2. We start with our previous profit of 18,436, and for the second option, we need to charge depreciation of 2,400. And remember that depreciation is an overhead, which means that this will definitely reduce our profit for the year. So that's minus 2,400. Then we also have interest to be paid to Hamid, right? And interest payment is basically an overhead as well, which is going to reduce the profit. So we need to subtract this 600 as well. That's minus 600. And like I said before, in order to figure out Jamila's share of profit, we just need to divide the total profit by 2. So that's divided by 2, which results in her share of profit according to option 2 to be 7,718. Okay, now for the next question, we need to advise the partners which option they should choose, whether they should choose option 1 or option 2. Okay. From the first glance, we can see that each partner will receive a profit of 6,718 from option 1, whereas they will receive 7,718 from option 2. So obviously the profit is higher from option 2, so that would be a better choice, right? Let's write it down. Option 2 will result in a higher profit for each partner as compared to option 1. Then in our option 1, we are considering to employ a part-time bookkeeper. So bookkeeper is a very essential employee of a business because we are basically handing all of our financial accounts to them. So that person needs to be trustworthy, which means that in order to implement option 1, we need to find an employee who can be trusted, right? Let's write it down. In order to go with option 1, we need to find an employee who can be trusted. And in option 2, we are talking about considering a computerized accounting package. So if we implement the computerized accounting package, then obviously it can handle large amounts of data very easily as compared to the bookkeeper, because if we have very large amounts of data for one single employee, then that's going to be quite difficult on him, right? But if we're talking about a computerized accounting system, then it can easily handle all of the large data as well. So that's an advantage. Let's write it down. Computerized accounting package will be able to handle large amounts of data. But in order to learn to operate this computerized accounting package, there might be some training required, right? Let's write it down as well. Option 2 might require some training. Now, based on all of these factors, we need to advise the partners which option they should choose. So personally, I would go with option 2 with the computerized accounting package, because like I said, it will be able to handle large amounts of data, and in the long run as well, the cost is only one of course. So we have to pay 12,000 once, as compared to the bookkeeper whom we have to pay 5,000 each year, right? So in the long run, the cost is also going to be lower for option 2 as compared to option 1. So I'm just going to write down that decision clearly. The partners should choose option 2. All right, this concludes the first question of 2023 Specimen Paper 2. If you found this video useful, make sure you like the video and leave a comment below. And make sure you're also subscribed to the channel and hit the bell icon so that you do not miss any of these videos in the future. Thank you.